It's hard to believe that we're now well and truly into the second quarter of this year, and as such, we're starting to see official earnings reports trickle in for publicly traded companies for Q1. Today, just 26 days into April, Tesla has published its official figures for the first quarter of the year, showing massive growth in excess of $10 billion in total revenue and more than $2.2 billion gross profit. We've seen it yet again break records for total vehicle production and deliveries. From just 2 of its 4 in-production models, the Model 3 become the best-selling premium sedan in the world, electric or not, and we've seen it pay off more than $1.2 billion in debt. Oh, and invest $1.2 billion, 10% of its gross revenue or more than half of its total gross profit, in cryptocurrency. Strap in. It's going to be fun. Let's start off with a disclaimer. Everything in today's script is based on the publicly available Tesla earnings report, which you can read for yourself by heading to ir.tesla.com, which is Tesla's investor relations website. As Tesla itself notes, the financials in the report are unaudited at present, but are the official figures that will be submitted to the US Securities and Exchanges Commission using Form 10-Q. No, don't ask me how or why it's called Form 10-Q. I have got nothing. Nor do I know why Tesla decided to release its quarterlies and earnings report today. It normally does it midweek on a Wednesday after the close of markets. So your guess is as good as mine. I just know that it threw us all in a loop when we realised it was happening today, not Wednesday. Thanks for keeping us on our toes, Elon. Since we've been doing these quarterly reports for some time, we're going to follow our usual pattern. We'll take care of figures first, then we'll look at the news released in the quarterly report, as well as detail some of the things we've learned from the earnings call following the release of the report. Production first. During the first quarter, Tesla produced a record-breaking 180,338 cars, split between Tesla Model 3 and Tesla Model Y. Yeah, that's right. For the first time since the Model S and Model X entered into the market in 2012 and 2015 respectively, not a single Tesla Model S nor Tesla Model X were produced during the quarter. That's because Tesla's Fremont production lines, where Model S and Model X are made, were retooling for the launch of the refreshed Model S and Model X that we happened to learn about in last quarter's earnings report. And at this point, I think it is important to acknowledge just what a massive expansion we've seen in Model 3 and Model Y production. A year ago, Tesla made just 87,282 Model 3 and Model Y combined, meaning that it has undertaken a 107% growth in Model 3 and Model Y production in just 1 year. And while total production of vehicles for the quarter was only slightly higher than the production figures for the previous quarter, the Model 3 and Model Y production was significantly higher. Deliveries next. During the first quarter, a total of 184,877 Teslas were delivered, with 2,030 of them being Model S and Model X, cars which had obviously been produced in Q4 but not been delivered at the quarter's end. The rest were all Model 3 and Model Y. And again, these figures are a record for Tesla, with year-on-year deliveries for Model 3 and Model Y up 140% year-on-year. As with Q4, more cars were delivered than were produced. And having driven along the I-5 corridor at the end of March, I can attest to the sheer number of trucks I saw with rows of Teslas on the back of them. This is great news for Tesla's bottom line, but it's resulted in fewer cars in inventory, with just 8 days' worth of global vehicle supply for the company at the end of the quarter, the lowest it's been for some time. This shows that Tesla's cars are continuing to be in high demand, even with seemingly continuous shifts in sticker price, but it can also cause problems down the line, as it may mean that Tesla may soon find itself with fewer vehicles to sell than customers who want to buy them. Or for that matter, lease them, a figure borne out by the 56% growth in the number of vehicles being leased by customers around the world compared to this time last year, including 13,602 vehicles it leased to customers in this past quarter. There are now more than 83,000 leased Teslas on the world's roads. Why is this so important? Well, a leased vehicle continues to provide a revenue stream after it leaves the showroom, while a purchased vehicle does not provide a revenue stream directly to Tesla. With all of these new cars on the road, you'd expect a decent growth in service, charging and aftermarket support. Tesla thus expanded its mobile service fleet during the first quarter by 100 additional Service Ranger units, but only added 38 new sales and service locations. Given that COVID is still a concern in most of the world, it does seem to make sense, however, that Tesla expanded its mobile staff more quickly than it did its physical locations. Additionally, of course, there are much lower overheads with mobile versus brick-and-mortar-based service teams. Also getting a boost during the quarter, Tesla Supercharger locations, with an additional 135 new Supercharger sites coming online in Q1 and a total of 1,238 new Supercharger connectors going online. Of course, not all of these were at new locations, as Tesla has been aggressively expanding existing Supercharger sites around the world to meet demand in high-traffic areas. Unlike previous quarters where Tesla upped its annual capacity at its factories, there's currently no change for the first quarter, with Tesla's current production capacity sticking at 1.05 million cars per year. That is, however, before Giga Berlin and Giga Texas come online, the former becoming an increasingly big headache for Tesla as it fights some pretty large amounts of red tape, and the latter being far from ready to commission, although Giga Texas is expected to begin vehicle production sometime this year. Additionally, Musk noted during the earnings call that Model S and Model X production should ramp up this year, with around 2,000 Model S and Model X cars being produced per week by Q3. Noting that the refreshed Model S and Model X are also a lot cheaper to produce than their predecessors, Musk dropped some hints that gross automotive margin could stay impressively high during the earnings call. Before we get to the money side, though, let's look at Tesla's energy side of its business. During the quarter, Tesla deployed 92 megawatts of solar and 445 megawatt hours of energy storage. The former is a record for the company, but the latter is less than 1/3 of the storage deployed during Q4 last year. Since Tesla needs battery packs for its vehicles and its energy storage products, it does hint that maybe there is a bottleneck and, in turn, might explain why Tesla recently decided to only sell Powerwalls to customers who were also buying Tesla solar products for their home. And yes, side note, I know some of you had asked us to do a video specifically on Tesla's massive price hike in solar roof costs, as well as the recent announcement it would offer customers a free single Powerwall as a deal sweetener if they were willing to go ahead with their planned install even after the price rise. But this video is about Tesla earnings, and I promise we'll try and do a video on the solar price hikes very soon. In the first quarter, Tesla's total automotive revenue totaled $9.002 billion, slightly less than the $9.314 billion of the previous quarter. This is not only because of Tesla's highest priced cars, Model S and Model X, being out of production for the quarter, but also because the average sales price of its Chinese-made vehicles, which were lower than the US-made vehicles, dragged down total revenue slightly. However, what is interesting to note is that while total automotive revenues were down, automotive gross profit was up $2.385 billion from $2.24 billion in the previous quarter, pushing the automotive gross margin up to 26.5%. That's an incredibly healthy figure and demonstrates that Tesla has really dialed in its construction methods and cost savings for Model 3 and Model Y. Some of that, I'll wager, comes from the shift to Tesla's new massive pressings for Model Y chassis components, as well as the lower costs associated with producing more of Tesla's global fleet in China. We're often told by experts in the comments section, and we know they're experts because they're in the comments section, that Tesla would never make a profit if they didn't sell regulatory credits. And as usual, I'm expecting some Wall Street expert to tell us that that was the case in this quarter, with Tesla making a cool $518 million for simply making more electric vehicles than anyone else, having excess zero-emission vehicle credits, and then being willing to sell those to car companies who hadn't quite gotten off their collective bottoms to make enough cars to avoid paying heavy fines. Except, honestly, anyone who tells you this is completely clueless. Even without regulatory credits, Tesla would still have made a profit this quarter because its total revenues, $10.389 billion, less than last quarter but still really good, and its total gross profit means that it still had $2.215 billion to play with. And $2.215 billion is a much larger figure than $518 million. Trust me. I could, of course, go through the entire balance sheet, but as usual, that would take a long time, and I know that most people watching this want the earnings per share, as well as a few other key figures. But before I get to those, there is something else that we need to talk about. Something unusual about Tesla's quarterlies: cryptocurrency. As you may or may not know, Elon Musk has been very positive about cryptocurrency in recent months, and Tesla dumped more than $1.2 billion into cryptocurrencies during the quarter. This pushed Tesla's cash and cash equivalents down, but Tesla also managed to make $101 million on selling Bitcoin during the quarter. Side note, it actually originally purchased $1.5 billion in Bitcoin back in February, which was the largest purchase of Bitcoin to date. It then sold $272 million of Bitcoin, making that $101 million profit in the process. Why did Tesla get into Bitcoin? Well, aside from Elon Musk's love of cryptocurrency, the company's CFO, Zach Kirkhorn, confirmed during today's earnings call that Tesla was looking for an alternative way to store money that would be easy to access while avoiding all of the low yields that traditional banking solutions were currently offering. According to the back-of-the-napkin maths that I've done, Tesla made 8% or more ROI in just one quarter, so I'd respectfully suggest it found what it was looking for. So, enough of that, let's get to the profits. Using the non-GAAP method, Tesla's profit was $1.052 billion, equivalent to 93 cents per share. Using the GAAP method, Tesla's profit is listed at $438 million, or 39 cents per share. That's up on the previous quarter by a significant amount, and right now, Tesla's growth shows zero signs of slowing. To the press call. While I'm not going to go over every little thing in here, let's pick some important things to note. First, Musk acknowledged that Tesla miscalculated the complexity of its solar tile roof installations, but noted that demand is still strong and reiterated Tesla's commitment to bundling batteries with all Tesla solar roof systems, and reminding everyone that Tesla has just announced the expansion of its effective capacity of Powerwalls via an over-the-air software update. Discussing virtual power plant capabilities and the benefits for both customers and utility companies, you might think that Elon would be keen to set up Tesla as an energy company, but during the call, he actually stated that he believed it will eventually be seen as a robotics company thanks to the work it's been doing on neural nets and artificial intelligence. Some of that revolves around Tesla's Project Dojo, its incredibly powerful AI system, which Musk proudly confirmed is getting good at auto-labeling, something that allows Tesla's systems to accurately identify what it sees. Eventually, Musk hinted the company might be open to selling the technology behind or access to Project Dojo's neural net. To batteries. There were several questions in the earnings call about the 4680 cells that Tesla unveiled during its battery day last year. While the market and Tesla fans are eager for Tesla to ramp up production, Musk reiterated that Tesla is still between 12 and 18 months away from volume 4680 cell production. Finally, we should talk about the Tesla crash in Texas a few weeks ago, one in which witnesses claim nobody was at the wheel and which claimed the lives of the car's 2 occupants. Musk has previously gone on the record to state that logs from the car in question show it was not using autopilot at the time of the collision, something which contradicts police witness statements. Musk also claimed during the call that Tesla's own investigation has found all seatbelts were unbuckled during the accident and that the steering wheel was deformed, indicating someone in the driver's seat. Given that there's an ongoing investigation into this and there are conflicting reports made by different people, I honestly think we can only wait until the full, final police and NHTSA investigation has concluded before we really know for sure what happened. And to be clear, I'm not mentioning it here for anything other than a point of clarity. We're working on a longer form video discussing the fallout to the accident and last week's Consumer Reports video for later this week. So there you have it. Tesla is continuing to expand, grow, and remains a favourite among electric car buyers. It's great to see, and frankly, I hope it continues as we witness a transition towards cleaner, greener vehicles. And of course, I hope that every other automaker comes along for the ride, with new and exciting electric models coming to market from across the spectrum of price points and vehicle styles. It's really starting to feel like we're at a turning point in the automotive world. And of course, Tesla was the company that really started it all. That's it. Thanks for joining me, and I'll see you next time.